Good morning. Minutes of the FOMC meeting of January 26th indicated that the committee would take monetary tightening in a measured way, assessing the situation after every meeting. This douses some of the apprehensions of the market, where forecasts had reached a high of 7 hikes in the year. Evaluation of price trends would thus be crucial to see where the rate ultimately heads to. The minutes have calmed markets somewhat, stocks recovering from initial sell-off and yields retreating. Also helping the calmness in equities was a report that Russian troops pulled back from Ukraine border, and I believe that peaceful resolution was underway, although US officials continue to dispute the same. US macro data on retail sales and industrial production came much better, adding to market speculation of immediate rate hike by 0.5%. But minutes help them to calm those fears. Data confirms that inflation has been rising to record highs in other countries also. UK core inflation hit a high last seen in 1992, while Canadian CPI beat expectations by a large measure, again at a level last seen in 1991. Central banks are expected to raise policy rates at their next meeting in both UK and Canada. Unlike other developed countries, China reported a lower inflation, both on CPI and PPI, for the month of January, supporting central banks' easing stance. It also confirms that supply side measures initiated by the government has been working. Lower inflation despite soaring oil prices is significant. Dovish reading, or rather a hawkish reading of, or a less hawkish reading of the FOMC minutes pushed dollar index lower, led by gains in Euro and GBP. Better data on industrial production on Eurozone, as well as higher UK CPI, supported the respective currencies. Technicals are aligned for more losses for the dollar in the sessions ahead. Rupee built on its Tuesday's gains as geopoliticals calmed. Oil prices remain volatile, but technically there are early signs of seeing a near-term top. Reports suggesting that LIC IPO will get done by middle of next month also kept a lid on USD-INR gains. Expect the pair to move in a lower range of 74.75 and 75.30 in the next few sessions. Thank you. Have a nice day.
Thanks, CK. So post FOMC meeting, there's a 10 basis cool off in 2-year US yield, which clearly indicates that market is now pricing lesser probability of 50 basis hike in March. Currently, market is pricing 45% probability of a rate hike of 50 basis in the March, but 25 basis is a done deal. Brent crude oil prices fell sharply, almost by 4% to $92, on indication that France and Iran are closer to salvage nuclear deal. Currently, Brent crude oil is dealing at $93, which moved up by $1. Before fall yesterday, $96 was a Brent crude oil price. Gold made a decent gain of a $20 to 1870 on a lesser hawkish Fed minutes. Gold now is dealing at $1868, which is around closing levels. Asian currencies are stronger today, led by Thai baht and yuan, which is up by 0.3%. We noticed there's some paying interest in forwards due to lower USD INR level, which might continue today as well. 1 year forward premium yesterday closed at 3 rupees. It may go up to 310. The recent low was 282. So there's a good up move on forward points as well. Data check. RBI sold approx $3 billion net during the month of December when USD moved higher than 76 rupees per USD. That's all from me. Thank you. Have a nice day.